Is we live or is we live? What's good, y'all? It's another episode. Cheef and Chart, man. This your man, Don Bucks. And you know what I said today? I said, you know what, man? This is my show. I ain't rushing my show, man. Like sometimes I'll be thinking I'll be rushing. After the fact, Monday quarterback. But this is a Rap and Dope production. The home of money conversations. And by the way, this is not financial advice, but we are going to be talking about options trading and how to look at these damn charts. I'll let Cheef define this. You feel me? Plug is still running strong, man. The same flavor, man. He is killing the game. This weed tastes so good. That make no sense. A shout out to y'all if y'all had a dope trading week, because I told y'all if y'all been paying attention. As a matter of fact, hit that like, hit the subscribe button right now. Hit the subscribe and the notification bell so you can be notified from when I go live and I'll be talking about this stuff. Because if y'all been paying attention, y'all know that the S&P 500 was at an important point in inflection point on the chart, because we was on the downtrend and everybody was screaming about the stock market ever since January. Ever since January, it was like this in the market. I ain't see nothing on Instagram. I'm like, where all the options traders? I'm like, yo, where y'all at? It's like, during 2020, option was easy. Like you could have threw a rock anywhere in any direction and hit. But now, things are kind of, a little bit different. You actually have to know what you're doing. So jokers lost a lot of money. I know they did. Because I lost some money. But I ain't blow my account. You understand what I'm saying? So that's how I'm able to bring y'all nuanced information. This is not book knowledge. It's exercised book knowledge. You know what I'm saying? Because it's one thing to know something, but it's a whole nother thing to experience and have the knowledge from the experience. And that's what I want to bring to y'all. I want to bring to y'all the knowledge from my experience, wins and losses. So y'all been following last week. Speaking of losses, last week was crazy. Wasn't a good week. It wasn't a bad week and it wasn't a good week. But if it wasn't good, it had to be not good, which is bad. So I told you I was trading a new stock. And one stock is enough. And this is why. This is a prime example. I was trading ASO. I was starting not to like how the spreads was looking. Spreads was too wide. If y'all took my course, you know how I feel about spreads. Like when there's good volume, that means the spreads are tighter. So the volume and the spreads was looking real janky in ASO. So I fell back from ASO. Dope company. Dope ass company. But the spreads on the options contracts janky. So I'm going to find me another stock. So there's nothing wrong with changing your stock. Like you're not married to these stocks. You dig what I'm saying? If things change, like in my instance, I ain't like how the spreads was looking. So I found another stock that the spreads was dope, it was tight. And that was MO. So with trading a stock, you have to get to know it. What does that mean? What does getting to know your stock mean? That means, first off, knowing if it respects levels. Like, does it bounce cleanly on support, or does it violate often? right? You got some stocks that hold cleanly at support or bounce cleanly at resistance. You got some stocks that violate often, that shoot through resistance and test it and come back down. So you have to learn your stock. And when you got 5 and 6 stocks, how you playing 5 and 6 stocks? Oh, you that good, huh? Oh, you that good. Okay, say less. Let me know how that work out for you. Most people that trade multiple stocks at one time that just starting out, it don't work out too well. So my thing is this. They end up like this. Yeah, like trading too many stocks, man. You only need one because you have to learn it. So that's what happened to me. You see what happened to me last week. I'm learning MO. So MO, my new stock. So I'm trading MO. And first off, it was part learning the stock and part doing what I wasn't supposed to be doing. So this is what I'm trying to tell y'all. Sometimes you got to stick to the script. And sometimes even the best of them don't stick to the script. Like myself, I didn't stick to the script. I didn't stick to the script, and I'm trading in a range. And I told y'all, if y'all took my course, you know that trading in ranges or less, the probability of your trades are lower. Trading in ranges. What is a range? A range is when the stock is trading sideways versus going up in a trend or going down in a trend. So those are trends when it's going down or when it's going up. When you see a stock trading sideways, like bouncing between two levels and just going sideways, that's a range. Them ranges be mad unpredictable. And with options, we want to put the odds in our favor. We want to do things that have a high probability, and ranges have a low probability. And I was trading in it. That's why. So part that, part me learning a new stock. And I'm doing this small account challenge to show people that it doesn't take a lot of money to start with options trading. Like if y'all know my story, I started with part of the stimulus check. I used about $500 of the stimulus check. I started small. I was making $50 trades, and as I started profiting, I started increasing my trades. And before you know it, I was having $1,000 days. So you're not going to start out having $1,000 days. You have to start small. So that's what I'm doing with the small account challenge, showing people real time how I'm going to grow this $100 account. So I chose stocks. What people don't realize is that the more expensive the stock, the more expensive the options contracts. So if you're trying to figure out what your emotional risk tolerance is, and you figure that out, like, damn, you know what? If I was to trade $20 and lose it, or if it goes against me and I lose half of it, $10 of it, and I cut my losses, I lose $10 in a trade, I won't be mad. And if I do it again, make another $20 trade, and I lose half of it, damn, I lost another $10. And you can do that maybe 3 times, 4 times, and it don't discourage you, and you can keep trading as long as you're using the same edge, the same probability trade. You're doing the same thing over and over and over again. You're not changing your trading time frame. You're not doing different things. If you're doing what works over and over and over, and it doesn't work 3 times for some odd reason, like it worked 20 times before, right? You did a sample test, you paper traded this one strategy on the same trading time frame. Use the same strategy. 20 times and it worked 15 times out of 20. Now you're using real money, and just so happens it doesn't work 3 times or 4 times. That doesn't necessarily mean that your strategy is wrong. Sometimes the market is going to do what it's going to do. This is why a lot of people lose money, because they'll mess around and change their strategy when it's not necessarily the strategy. We already know it works. We already know the strategy works, fam. Don't change the strategy. The market is going to do what it's going to do anyway. So sometimes, a lot of times, it don't be you, it be the market. So keep doing that over and over, doing the same thing. So I'm just making sure that if you're doing the same thing over and over and over again, and the trade goes against you 3 or 4 times, what is that amount that you'll still be willing to trade? So for some people it's $20, some people it's $40. You have to decide what that is. Then we're going to pick what kind of contracts, or what company offers those contracts that cost that much, right? So, got where I was going with that, but that's what you want to do. You want to keep doing the same thing over and over and over again. So yeah, keep doing the same thing over and over again. But you want to make sure that you're not over leveraging, using that threshold that you set out from the beginning. You feel me? So with this small account challenge, I'm only using, like, it's only $100 that I deposited, and it was down. Like I said, I think that's where I was going with it. I was down from last week learning this stock and trading in that range. So being that I wasn't over leveraging, I was able to, because I think my contracts in this stock is about $20 for the expiration and the strike prices that I was picking. So that's about 1/5 of $100, right? Some people say rule of thumb 10%. So 1/10, I'm supposed to usually only be using $10 for the contracts, but I'm not necessarily a beginner anymore. So, but don't over leverage. Give yourself some room to keep trading so you don't blow the account in case stuff goes against you. So, y'all can follow along. Paper trading, a small account. Webull offer that. Thinkorswim, TD Thinkorswim offer that. So you can practice. But what are you going to practice? You got to get my course. Link somewhere in the description or the about page or something on YouTube. Or you can go to gumroad.com/rappanddope. Also got a free checklist. Checklist is dope too. Might want to grab that free checklist. That's also at gumroad.com/rappanddope. Free checklist, options trading for the people. But shout out to not over leveraging. We are out of the downtrend, fam. What I tell y'all yesterday? Man, hit that notification bell, man. If you ain't hit the notification bell, that's your fault if you missed it. But yesterday I told y'all what was going to happen today. Preface that. You don't have to be right, but I said this is a probability thing. So what I seen, there was a high probability of what I said was going to happen. Let me say that. And it happened. You did. It was a high probability of what I saw happening, and it happened. So that's what's, we can get happy, we can get caught up in that, but we also have to just keep in mind that yes, it's a high probability. It's not 100%, It's a high probability. It's not 100%. That's all we can ask for. That is it. That is all we can hope for with the market is high probability. I think that is the major hangup. People think they got to be 100% right. Don't and can't. Even if you wanted to be, you can't be 100% right in the market. All you can do is put the odds in your favor. So this is what we're doing. We're learning uh, the different conclusions from things that we see. Okay, what is the highest probability conclusion from this scenario, right? So that's what we're doing. Just can't be right, or you're not going to be right. 100%. High probability situation is the best we can hope for. All right, now let's get to some charts. Get off my soapbox. But nah, man, I be wanting to kick it, man. This is my show. And y'all just think, man, y'all can start a show too, man. It's 2022, man. All you need is a Google account and you can be like, Mama, I made it. You can be like, Mama, I made it. So boom. I told y'all, right? Yesterday, what happened? This is the daily. What happened yesterday? I'm psyched up, man. I'm smiling, shit, all cheesing. But yo, check what happened. So I told y'all, if y'all caught a couple of my reels or seen any of my videos of late, I told y'all what was going on. So you see this downtrend channel here, right? You got the lower highs and you got the lower lows, right? And it's just bouncing in this downtrend channel. How can we recognize when the downtrend is over is first off when it breaks through the channel, right? That's one. But the second criteria is when it starts on an uptrend and it goes above the last swing high of the downtrend. So the last swing high of the downtrend is here, right? And what is a swing high? As we know with the stock market, shit just don't go straight down. Shit goes down, it retraces up a little bit, down, retrace up a little bit, down, retrace up, down, retrace up. So on its way down, it retraces up. Same thing on the way up. It just don't go straight up. It goes up, retrace down a little bit, up, retrace down a little bit, up. So how to recognize a downtrend is the downs are way bigger than the retrace ups. And you can see that on this downtrend. Big downs, a little bit of up. Big down, a little bit of up. So that's how you can recognize a downtrend. But on the uptrend, it's just the reverse. Big up, a little bit of down. Big up, a little bit of down. So that's how you recognize an uptrend. So we see that going on here. Then it broke through the downtrend channel. Now what we were looking for is it to break past the level of the last swing high. So those are the retracements up on the downtrend. So that's this right here. That's this area here. As you can see, this is the last swing high of the downtrend before it broke through the channel. So this right here was an important level. Oh, this is an important level. But yo, so yeah, yesterday it bust through here, right? What was yesterday? The 10th. So as you can see, this green bar here is where it busts through this level that I have labeled. Make it bigger so y'all can see. This bar right here is that level, and this green bar is yesterday. How did I know that was going to happen? Well, there's some indicators, right, that you can use to confirm what you see. And that's really the purpose of indicators, to confirm what you see. Some people, there's so many indicators you can use, but my recommendation is to keep it simple. The less, the better. Now y'all heard that before. Sometimes less is more, right? And that applies here too. So yesterday it bust through, and but how did I know it was going to bust through? My criteria is the momentum. I look for momentum, a momentum divergence. And I explained that, I think I explained that either yesterday or whatever, but recap is I look for a new high in the MACD relative to, previous swings or whatever. So down here, maybe it's the previous down drag on the uptrend. So compared to here, right here is a new high. But I look up and there's weakness. That is called a momentum divergence. There's momentum to the upside, but it's not registering in the chart. That's what the indicator is telling me, that there's momentum to the upside. So why is it showing, a red candle? That is a telltale sign that you should be buying that weakness. And what happened? If you would have bought this weakness at 411 and bought a contract 4 days out to that day, yesterday, you would have cashed out because you would have seen the weakness, but the strength. So momentum divergence. Like, okay, I need to do a call here. Lo and behold, this is what happened. It was a high probability of that happening. When that happens, those two added together equals that result. High probability of that result. And that's what happened to yesterday. So that blasted us past this level. So if you had any other stocks going on, usually this is why we look at the SPY first, because whatever the SPY is doing, I say this every episode, and I'm probably going to keep saying it, that whatever the SPY is doing, a lot of times out of 10, rest of the market is doing. And if you look at your chart probably going to look similar. So let's look at my stock, which is MO. So I'm going to take it to my stock. Show y'all what I did, if I can remember verbatim. So look, it looks similar, don't it? Just on a slower scale, because my stock is only $45. The SPY ETF is $400. So my bars are a little bit smaller, but the downtrend effect is still the same. The important swing high level is still the same. And we broke through that. We broke through ours as well the other day. So now there's a lot of volume to the upside. And just like I seen on the SPY, this is the daily. This is not my trading time frame. But just like I seen on the SPY, I see weakness in these bars, right? Even here, weakness, pin bar. You know how I feel about pin bars if y'all took my course. Pin bars that support weakness, a red bar, but I see a new high in the MACD. That means buy that weakness. What happens? Upside. Take profit, right? Wait for it to fall because it has to retrace. Take, you see a pin bar as support again with strength in the MACD. You want to buy any weakness. You do a call right here because there's a new high in the MACD. Look what happens. Upside. So that's exactly what I did. But let's go to my time frame, my trading time frame. Yeah, this week has been going pretty well. So my trading time frame is here. Yesterday was the 10th. So, all right, so boom, we took calls the other day here, took profit here, wait for it to drop here, pin bar as support, new high in the MACD. You buy this weakness. Took calls here this morning, took profit here. Yeah, this morning took profit here, waited for it to fall. It dropped, but how do I know it was going to stop falling? I'll go to my relatable time frame, which is the half an hour, and I'll wait. I'll wait for it to show a green bar because you can't see that in the 2-hour bar. This is why you need a relatable time frame, right? You can't see that in here. What's going on in this bar at 12? What was it? 17:30. So let's go to the half an hour at 17:30. See? So 17:30, that means you have 1, 2, so you got 4 bars in a 2-hour bar. So you got 1, 17:30. So that's probably these 4. 1, 2, 3, 4. That's probably these right here. And this is where I know that it was done falling. Right? Because this is actually, let's see, it's probably a level. Most likely it's a level somewhere all the way back here. Let's see. Let's see. So yeah, look at that. Look at that. Price has memory. Look at that. Look at that. This is why it's so important to draw levels. Oh, shoot that John up there. Let's see if that's a level too. Most likely it is. And it is. Look at that. It is. So it stopped at a level, y'all. This is why it's important to draw levels. So this is an area, actually. I would say this whole John is stopped right at it. So it's going to bounce tomorrow. All right. It's going to bounce. And I took calls there. When I seen that green bar, that signified that in my 2-hour bar, that was good. It's a 2-hour. That's the 2 hour. Let's try. See what happens. You're giving up that flame. You two want to act crazy. So I believe it's the 2 hour, right? It has to be. It has to be 2 hour. All right, how about this? It's trying me. But we just go right back to it. Just go right back to it. No thing. Chicken wang on the string, and man. Oh. All right, sure, boom. Oh, that was the half an hour. All right, let's go just 2 hours. So where do I think it's going? I think it's going to 46. You may not do it tomorrow, but that's where I believe it's going. As you can see, look at this. New high in the MACD with a red bar. That's a recipe for buy this weakness. So as soon as you seen this red bar and seen that strength, I would took it. You're supposed to take it 2 hours your trading time frame, take it down. Like, all right, when is it going to stop? Boom, here go the green bar. It's telling you it's stopping. This is where you buy your call. High probability, right? Because it's on an uptrend. So wait for the pullback after the run up. So I caught this already, took profit, wait for it to stop falling, for it to continue to uptrend. So this is what the half an hour is saying for my 2 hour time frame. It's time to cop. So that's what I did. I grabbed a 2 weeks out because you got to take in consideration. I plan on cashing this out Monday. So I already had my trading time frame, trading plan in mind, buying the contract. And this is what you got to have too. All this comes over time, though. You're not going to have all this stuff mentally in place when you first start. This takes practice where you be able to look at stuff and be able to make decisions faster. Right now, it's mechanical. Like when you first started driving, you had 2 hands on the steering wheel. Now it's like you do mad stuff when you drive. That's how it's going to be with this. Same thing. This is what I mean when I be like, put it into work. You see little reels and shit. And I be talking about, this is what I be talking about. Putting in the work so this stuff can become second nature. Okay? So that's what I got going on. The market is on an uptrend. We done broke the downtrend, y'all. So if you've been buying for your long-term portfolio, that's dope. Right now, it's still a good time. Right now is a good time. Like tomorrow is a good time to drop the bag on all this stuff that's cheap. I mean, feel free to hit, like I said, gumroad.com/rapanddough. See what I got going on there. I got the dividend courses in there. Show you about all the dope dividend companies you need to be buying when you make money with your options. Yeah, man. So that's what's going on, man. It's your man Don Bucks. Gotta maybe my weed go out. Keep chiefing. Keep charting, man. I'll see y'all tomorrow.